Kevin McCarthy, the House Speaker, signals some optimism, and we're seeing some good news for Americans and some bad news for Americans. And I'll let you know all the details in this video. Let's jump right in. Thanks so much for liking these videos. Here we go. Well, Kevin McCarthy just met with President Biden over the debt ceiling to prevent the country from defaulting. Well, they're nowhere close to actually making this happen because the Republicans want to make cuts to, well, the budgets for our country, but they don't know actually what they want to cut yet. But Kevin McCarthy actually kind of started to give us some details. Here's what he said. Take a listen.
Yeah, I think our first meeting was a good meeting. I don't want to put it in any false perspectives. We both have different perspectives on this, but I thought this was a good meeting. We promised we would continue the conversation. We'll see if we can get there. I think at the end of the day, we can find common ground. I really do.
Now, we know heading into this meeting that the White House was really going to try to press Kevin McCarthy on what exactly do Republicans want to cut when it comes to spending. But the thing is, Wolf, they have not come to an agreement on that yet. They did have a conference meeting earlier today where they talked about some broad principles. Kevin McCarthy also told reporters just now that he reiterated that they do not want to cut Social Security and Medicare, but they do want to cut back spending. There are a lot of different ways to do that. There are a lot of different debates about how to get there. So this is going to be a process. And there is some frustration among Republicans that they don't have a clear plan yet. I talked to one Republican, Dan Crenshaw, a Texas Republican. He said he stood up in that conference this morning and demanded more specifics from leaders. But Kevin McCarthy, at this point, he wants to keep the conversation going. He says he doesn't want to negotiate in the press. So the plan here going forward is to try to have a communication and dialogue with the White House and try to have a back and forth. And heading into the meeting, Kevin McCarthy said his ultimate goal was to try to get President Biden to at least acknowledge that they are going to have to work out some sort of deal with Republicans in order to raise the debt ceiling, and that they will need Republican buy-in. Up until this point, the White House has said they will not negotiate. They want a clean debt ceiling. They rightly point out that Republicans raised the debt ceiling multiple times under former President Donald Trump without putting any conditions on it. But they need to get to a point where they're even agreeing to negotiate before they can actually start negotiating, Wolf. So, like I said, this is going to be a long process in the few months ahead, and stakes really couldn't be higher.
So think about this. Our country's at risk of actually defaulting, running out of money completely. They can't print any more money. They can't borrow any more money until they agree on this and actually pass a law to be able to do so. Everything's at risk. The full faith and credit of the United States. Social Security payments are at risk. I'll show you. I'll show you here. Yeah, here's a headline right here from Barron's. Your Social Security check is at risk if the U.S. defaults. Medicare, Medicaid, everything's at risk because the government could run out of money. And we're down to like 100 days, somewhere around there, depending on the actual day that it would happen here. And the problem, everything, government jobs are at risk, government pensions are at risk, bonds are at risk, everything's at risk, right? It's a huge thing. Full faith and credit, the United States are at risk. And we're already past the debt limit. So this is unprecedented territory. And like you heard her say, they have to agree to even negotiate to begin with. This is how far apart they are, okay? The Democrats and the White House and President Biden are saying, we don't even want to negotiate. We should just raise the debt limit. We raised it 3 times for former President Donald Trump. They added almost $8 trillion to the national deficit, the most ever in a 4-year span. But Republicans are saying, debt's out of control, and rightfully so. I mean, the government spends about $1 trillion a year right now just in interest on our debt. So the interest alone on the $31.4 trillion is about $1 trillion a year. So in 4 years, that's going to be $4 trillion. Our military budget is over $800 billion a year. So over 4 years, that's $3.2 billion plus over 4 years alone. So think about that. Over 4 years, you're looking at $7.2 trillion just for the interest and the military budget. Nothing else. Literally nothing else. So think about that. That's how the scale and the scope of the government spending at this point. That's without a single anything else. That's without Social Security and Medicare deficits that are happening. That's without anything else. No discretionary spending, nothing. That's not sending a dime for, the war in Ukraine. That's not for SNAP benefits, Medicare or Medicaid or, anything else. Not a single other thing in the world. Nothing. So we got a serious debt problem in our country, and it's bad. And the Democrats don't even want to negotiate. They say we should just raise the debt limit because literally this is the $31.4 trillion is all past debt. That's nothing for new debt. Yeah, so let me know your thoughts here on this. And then Republicans want to cut stuff, but they don't even know what they want to cut. And honestly, I don't even know if they can agree on it at this point because they couldn't even agree on who to elect for speaker. It took them 15 votes. It's going to be a very hard process. And honestly, at this point, they're nowhere even close to getting it done. Now we have some good news for Americans. Mortgage rates are actually dropping here. We're seeing some interest rates drop, which is crazy despite the Fed just raising interest rates. Now, I'll tell you why this is happening. This is an anomaly in the market. And we actually just seen this recently here as well. So you can see the headline here, which is this headline's a little bit deceptive. Mortgage rates dropped to the 5% range for the first time since December. You're thinking 5%, but by 5% range, they mean 5.99%. So think more like 6% when they mean 5% range. They mean 5.99%. You can see the headlines here. The rate started this week at 6.21% and fell sharply Wednesday after the Federal Reserve Chairman said inflation has eased somewhat but remains elevated. And this is why this is good. You can see here, for someone buying a $400,000 home today, which is the average home is in that range, believe it or not, because in some parts of the country, you can't buy a home at all for that price. And in some parts of the country, you can buy a good home for that price. So the average home kind of falls in that range. So for someone buying a $400,000 home today with a 20% down payment, the monthly payment is $293 less than it would have been in October. So this is like significant. I mean, $293, it's like a car payment. Almost like not quite a brand new car payment because I think I've seen headlines like a brand new car payment is $700 a month. But I mean, that's $300 a month. That's $3,600 a year. This shows you how much interest rates matter, right? Interest rates matter a lot. I mean, $293 per month just on these slight interest rate changes matter a lot. They matter a lot, a lot, a lot. Like, I can't stress that enough to people. They don't realize that even the tiny, tiny amount of interest rates matter so much. Yeah, and that was when in October mortgage rates peaked at 7.37%, and now they're at 5.99%. Now, I'll tell you the reason why this is happening. And you'll understand this when I explain it, right? And this is why I think it's happening, is because remember, so the place that banks primarily they get money from a lot of different places. They get money from your savings accounts. They also can borrow money from the government. Okay, so they borrow money from the government basically at the prime rate. Okay, and so you can see right here, banks can borrow money from the government, from the banks, or from the from the Fed at basically think about it as 4.5% here, because remember, it just went up 0.25% here. But what they do is they charge you, if you have the best credit rating there is, and it's a mortgage, you're at 5.99. Let's think about it at 6%. Okay, so what happens is they're making about 1.5%, which is really not that much money. Okay, and the reason for that is that's only if you have the best credit there is, excellent credit, and it's a secured home mortgage. Because what happens is a very few amount of people on the home will eventually foreclose and they will have to sell the home and go through that expensive, lengthy process, and they'll end up probably losing money on that home. Don't forget that banks also have to pay all their employees, all those salaries at $50,000 a year. The average salary is around $50,000 a year. If you work for a bank, you probably have a maybe a little bit better than that. Maybe you're making 60,000, 70,000, and then there's higher up executives and stuff like that. They got to pay all those people and all those branches you walk into. They got to pay all those mortgages and stuff. Running a bank, all those you have all those costs, right? Okay. So they're making 1.5%, which is not that much money, but that's a secured mortgage. Okay, that's like the least riskiest mortgage. If you own a bank, or if you're a banking institution, you're also doing car loans. Car loans are a little bit more risky because if people are going to stop paying their car payment before they would their house, okay, those are a little bit higher interest rates. Okay, and then you have things like credit card interest rates, which are much, much higher. The average credit card interest rate is about 20% right now, with the highest ones being 30, 35%, because those are unsecured. Okay, they're not secured by anything, so people can file bankruptcy on them, people can charge them up and just not pay on them, and basically can get away with tens of thousands of dollars of credit card debt. Now, of course, it comes with financial repercussions for them, bankruptcy and things like that. They have to go to court and have all these things, but the reality of, or even debt consolidation for some people and stuff like that, but the reality of this is that who ends up taking the loss? The credit card company does. But that's why they charge 20 or 30%, or maybe if you have really good credit, it's, I don't know, 15% or 12% or something like that, right? So there's a big scale there. But remember, they're borrowing money right now at 4.5%. So it's all based on, remember, they also have to pay all their people and they have to pay for those buildings and their electricity bills and all their stuff, right? Okay. So they have all these different type of mortgages. And if you're a bank, you're getting money from people from their savings accounts, and you're also borrowing money from the Fed and from the government at the basically the prime rate, or the 4.5% rate. Okay. A year or two or three ago, they were basically borrowing money at zero, or like a quarter of a percent, but think of it as zero. And that's why all the rates were so much lower, okay? Because they were basically able to borrow money at 0%. But now they have to borrow money at 4.5%. Now, if they get money from checking accounts, from you guys depositing your money, they basically get that for much cheaper because they pay you just a little bit of interest in your checking and savings account. Now, those are starting to go up. You're starting to see savings account and money market accounts, which is kind of like a savings account, start to pay more interest as well. Those are starting to pay more money now. But you can kind of see how a lot of this stuff works. A lot of people don't really even know the ins and outs of this stuff. But that's why there's secured loans like homes. That's why they're much lower interest rates than credit cards. And car loans are normally a little bit higher, but a car loan is technically secured. But cars can get stolen, and then the insurance has to pay it off. But sometimes people don't have insurance or don't do what they're supposed to, and then the bank ends up taking the hit and all that stuff. But that's why it's a little bit riskier and it's normally a little bit higher. But as you can see here, the mortgage rates have actually gone down like 1% here lately. And I think the reason for that is because nobody's buying homes. Nobody's buying homes. And so I think that the banks have actually lowered their interest rates a little bit because they want to actually drum up some more business on the the home side. So I actually think that they've lowered the rates on their own a little bit to try to drum up some more business because nobody's buying any homes. Also, I think that they're seeing that inflation is coming down, and I also think that they're seeing that the Fed is lowering the interest rate hikes going forward. So they're kind of seeing into the future here that the interest rates are not going to keep going up. So they're kind of seeing for 2023 that, okay, they went from 0.75 interest rate hikes, 0.75, 0.75, and now we're only down to 0.25 interest rate hikes. So they're kind of saying, they're stopping the interest rate hikes, so we're going to stop raising our rates too. And they've actually kind of walked it back a little bit. So that's actually a good thing for Americans. Now, that doesn't mean they're going to do that with credit card interest rates as well, because remember, those are unsecured loans. So that's why you want to keep an eye on the different credit card rates if you have different credit cards, look at the interest rates that you have for each one, or whatever you have, you got to keep an eye on your rates, because you can see here that 1% on your mortgage can make a $300 a month difference. It's very, very important to know this stuff and keep an eye on this stuff. So let me know your thoughts. Let me know if this was useful here for you guys in the comments. And if you're new here, make sure to subscribe down below so you don't miss out on any videos. I'll keep you up to date here with everything going on here in our country on a daily basis. Make sure to subscribe. Click the bell icon after you subscribe. New videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. And thanks so much for liking, and share this video with anybody that needs to hear this information. Here's some videos you can watch next. You can click here to watch my newest video next. And also, here's a very interesting video I just did about the virus maybe resurging and a spy plane that's over the US right now. Yeah, so click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.